In September of 2024, my dividend portfolio paid me $198.69. This required zero work from me, so this is a true source of passive income. But after looking at the numbers, the really crazy thing is that half of those dollars came from monthly paying covered call ETFs. This means I'm now making $100 a month in passive income, and even crazier, I'm getting this monthly income with just over $6,500 spread out into 6 different investments. That means I'm getting 1.5% in the form of a dividend every single month, plus what I would get from SCHD every quarter, plus the interest I'm earning from my cash with Robinhood Gold. If you haven't heard of a covered call ETF, it just means the fund managers use options contracts to generate a yield, and then they pay us investors with the money that they make. This is different compared to holding a traditional dividend stock, and to be clear, this type of investment isn't for everyone. Every investment has its risks, so if you're interested, you just need to weigh the pros and cons. In this video, I'll show you my portfolio. We'll see how reliable the monthly dividends have been for all 6 of these types of ETFs I own, and more importantly, we'll see if I actually made money, because when an investment is paying a huge dividend, the chances that it's a yield trap, or when the overall value of the position is actually going down, are also higher. Instead of taking this as financial advice, which I'm not qualified to give you, so don't take it that way, I want you to think of this as financial show and tell with me, Rajvi. JEPI is the most critical ETF in this video because if a monthly paying covered call ETF from JP Morgan, a company that manages literally trillions of dollars, can't make this strategy work, it is highly unlikely anyone else would be able to do it. My position was worth about $1,000 since December of 2023, and I put in another $500 in August of 2024. Since first entering the position back in April of 2023, I've received 18 dividends, ranging from just over $2 a month to now over $11 in October of 2024. That's an increase of over 5x in less than 1 year. In total from JEPI, I've received $103.06 in dividends, and I'm up overall 7%. So now we know JEPI is viable, but options contract prices can benefit from the volatility in the markets. Compared to most stocks in the S&P 500, tech stocks see more price action, and there's a good chance this can translate to higher monthly payouts for investors, which is where JEPQ comes in. My position was worth about $1,000 since December of 2023. Since first entering the position, I've received 12 dividends ranging from just over $6 a month to now over $11 in October of 2024. In total, I've received $94.49 in total dividends, and I'm up overall 12%. Of course, not all tech stocks are created equal, and there does seem to be a significant amount of money and attention concentrated at the top of the tech stock food chain. FEPI focuses on these tech giants with the intention of getting even higher yields. My position was worth about $1,000 since December of 2023. Since first entering the position, I've received 9 dividends ranging from $20 to $23 a month. In total, I've received $200.27 in dividends, and Robinhood says I'm down 6%. But overall, the position is worth $1,100, so I'm still technically up from what I put into it. Now, of course, we all know that it's always better to make more money, but taxes are one of our largest expenses in life. With some careful tax planning, we can actually take home more money, which is where SPYI comes into the mix. It produces yield based on the S&P 500 stocks like JEPI, but it uses SPX index options rather than options on the individual stocks themselves for more favorable tax treatment, which means more money overall in our pockets at the end of the year, especially for me since this is all in a taxable Robinhood account. My position was worth about $1,000 since December of 2023. Since first entering the position, I've received 10 dividends ranging from $10 to $12 a month. The first dividend was about half that, given I split my initial buys in December and missed the cutoff to receive a dividend for one of the entries. In total, I've received $104.81 in dividends, and I'm up 6%. Investors are always looking for opportunities in the markets, but outside of stocks, there exists a way to generate a monthly income based on the VIX, or a measure of volatility in the marketplace. We can generate yield in our accounts by owning SVOL, but this also adds diversification, which is always valuable, especially when it pays you to spread out your risk. So I actually owned SVOL for a while, sold it, and then bought back into it. So since June of 2024, I've had over $1,000 invested. Since then, I've received 4 dividends ranging from $12 to $13. In total, since buying back in, I've received $54.40 in total dividends, and I'm down 3%. You might have noticed that all these ETFs have very strict structures to their strategy. The issue is that the market is a dynamic place and opportunity exists week to week and even day to day. ULTY gives the fund managers at YieldMax the flexibility to take advantage of these opportunities, and my thinking is that if the professionals can make a profit, it's worth it to me to own the fund because they're better at trading options than I am. It's totally hands-off for me, and if they can't turn a profit, I have no business trying it out myself. So either I'm getting paid or I prevent further losses because I'm not tempted to trade myself. I have YieldMax doing it in the background for me since I own ULTY. My position was worth about $500 since June of 2024. Since first entering the position, I've received 3 dividends ranging from $28 to $36 a month. In total, I've received $100.50 in total dividends, and I'm down 23%. But I'm still holding on to this position because there's a chance that with the dividends being this high, if they maintain their same levels, I would actually break even so long as the dividend keeps paying. So it's a bit of a risk, but in 3 months, I've already gotten back 20% of my initial capital. So I'm going to see where this goes from here because there's a chance this could just end up being a money printer or I could lose a bunch of money. As you can see, my portfolio looks very different than a lot of other dividend portfolios you might have seen on the internet. No dividend position in my entire portfolio is based on a single stock, and I explain my reasons for that in another video on your screen now, or you can find a link in the description below. I'll see you over there.